If you watch this video all the way to the end, I promise you order flow will never be a problem because I'm going to break it down step by step. And so this recording day is the 22nd of January. I took two trades. The first was a loss, the second was a win. And I'm going to break down exactly how I did that. So the first thing we're going to be breaking down is the short trade over here, right? So this was a short trade that I got into. This is roughly just after 10 a.m. or around 10 a.m. Eastern. So let's go over this trade and how I took it and why I took it, right? So the loss and the win both came from the same level. And if you can be mature enough to take a loss and then a win, that means that your level, your thesis was overall correct. You just have to adjust in the market. And that's what traders are meant to do. So let's break this trade down step by step. So we come into this level here and we break below our key level, right? So I had this key level in the markets. This is so ES futures on the 1 minute time frame. This is now between 69.35 and 69.41.42. So New York session, this trade here began to play out. And so what I was looking for specifically was a simple break and retest. Now, how do I look for a break and retest? A break and retest is the easiest thing. What you look for is a break below the level, and then you look for some kind of a retest. Now, here's the trick. I look for the entire break and I allow at least one candle to enter the zone, right? That's my retest. So I want to see how buyers and sellers interact at this area. So what I do is I draw a line just like this, right? This is what I do. I draw a line just like this. And I have a rule that when I'm taking a retest, I want to see price breaking and then retesting. And I'm really interested in this price action over here. So for me to go short, I can only go short after or as we come below the red line. Now, the theory behind that is that this is the break, right? This is the break. So if that is the break, right, I don't like to enter off the break. So this is the worst thing any trader can do, right? So if you have the problem of entering and then getting stopped out and you're not sure why, it's because of your ability to wait and then read a retest. And so that's what I'm going to be going through in this video. So if you were to take a short here, for example, and you have your stop loss just above the zone, that is the best way to take these frustrating losses, right? You don't need to take these losses. These losses are not necessary if you use break and retest and you use order flow. So again, breaking that down, I took a short here because it was a valid entry. So notice how I'm not looking to take this. This was not my position, right? My position for order flow was, my position for the short was here, right? So this was my position for the short. So I was entering just below this break over here on the order flow. So there was my entry over here. So my entry was at 69.32.75. So there was my entry there. Now, for me, this is a valid short, right? And I'm going to break down why. So I have my stop above here. And another thing I want to go through is my targets, right? How do I choose my targets in the market? So what I do is I go to the 15-minute time frame. And for me, what I was looking for was basically the London low, right? London low over here. This is the London low, and this was my target. Now, another thing you can use for target specifically is market profile, right? So there was a few targets to the downside, even though this trade didn't play out. So we had London low as the first target. We had POC, previous POC levels. That would be the second target. And ultimately, we had this huge fair value gap from Wednesday. So this would be my third target down at this level. So we had three targets to go short. And so having said that, the trade was completely valid and it didn't work out. So that's an example of a valid loss, or for me, a valid partial loss, right? Because the trade worked out the way I wanted it to, right? There was no problems there. This is the sign of a trader. If you can go from a loss to a win and you understand why you took each trade, that is the key skill, because you're never going to win all positions. So I am going to break down this short and why I took it. Now, what I am interested in personally is the break, but I'm more interested in the retest. And so the retest takes place anywhere between sort of this candle and the entry here. So the retest is where the money is, right? I've often said the money lies in the retest. The better you can read, the better you can wait for a retest, and the better you can actually read the retest, the more money you're going to make overall. So this was the retest area. So the retest is defined as all the candles between the break candle and the entry candle. So this is the break candle. This is the entry candle, just like this. And so the entry candle, again, just to be very specific with how I enter, right? Just to be very specific, this is the candle that really broke. And so I use the the bottom of the candle. It doesn't matter whether it's a wick, whether it's a body, whether it's a blue candle, red candle, green candle, any candle. It doesn't really matter. This is the break candle. This is the entry candle, and so I had my stop loss above here, or just in this region. Now the retest, like I said, is where the money is made. So this retest was from 9:50 Eastern on Thursday the 22nd to about 9:57. So that's about a 7-minute retest. Now you have to be prepared. Some retests are going to be 2 minutes, some retests are going to be 10 minutes, some retests are going to be 15, 20 minutes, and anything more than that, it's a rangy market. I'm happy just to sit out. But this is where the retest is, and this is where the money is made, right? So if you're wondering, if you get stopped out in the lower time frames, or you have any difficulty in knowing like kind of how to use order flow, or what things should I look for in order flow, or I'm using order flow and I still make mistakes, I move my stops, all these problems can be fixed if you adopt a break and retest model. Now there's a few things that I haven't gone through, so again, this is a key level, so this key level here was valid, so that's kind of step one. You have to have a key level, and I've made lots of videos on how to find your key levels correctly. Now, once you found your key levels, you're then looking for a break. So this is the next thing. You're looking for a break. That's going to be sort of step 2. And step 3 is the retest. And so step 3 is what people miss, right? And then technically step 4 would be your entry. So how do you pull the trigger? That's what I'm going to go through in this video. So pulling the trigger basically comes down to reading the retest. So I'm going to clear my charts. Let's now go to the order flow or ATAS platform. Let's kind of break this down step by step. So the yellow box here represents a retest, and the retest is where the money is. Now, if we go to, there we go. So this is my screenshot from the ATAS platform. Now, we're going to be diving in candle by candle just to see what was going on. So this chart here is the same as this chart here. They're the same thing, but we're going to dive into the specifics of it. So this is the key level, this is the break. So this is now 69.42 to about 36. So you needed this level on your charts before the session even began. So if we just take a look at this now, what we see over here, we see big red candle, we have some heavy selling volume, and we do break below the zone, right? We also have a lot of negative or red delta breaking below the zone. So what does that mean, right? What does that mean? Again, I've made tons of videos on what the numbers mean, what the delta means, but when you have a red, that means that there's more aggressive sellers than buyers. So in other words, there's more aggressive sell orders than aggressive buy orders. Hence why we have a negative delta. The left number is greater than the right number. There is a lot of aggressive selling over here. A lot of sellers pushing price down. Okay. Now, when we retest, and so this is what we're going to be focusing on. So we're going to be focusing on 1, 2, 3, 4, 5, 6, 7 sort of candles over here. This is where the money is made. And so if you think about it logically, let me just take you over to the side for a second. So this is where your retest is happening. So your retest, again, is going to look something like this. We're going to come into the zone and we're going to have some price action over here before we eventually break. Now, in this region, you're looking for what we call passive sellers, right? Here, you're looking for passive sellers. Now, passive sellers just means that there's limit orders, there's sell limit orders over here. So let me just write that, limit orders. And so think of it this way. If you have a ton of buy orders in this region, so let me draw that a little bit clearer. If you have a lot of buy orders in this region, right, a lot of positive delta, lots of more buy orders than sell orders, right? Buy orders have one objective, which is to drive price higher, right? That's essentially what this is, right? Market orders, right? Sorry, yeah, market orders drive price higher, or they want to drive price higher. That's the thing. Now, when we go to the ATAS platform, what we can see here is we see a lot of aggressive buying here, right? Blue delta, we see blue delta, blue, blue, and then we have this big red candle. So this is where I started to get interest, because what I'm seeing is the break, and then I'm seeing the retest, and you have to look for the retest. So when we go back to this is the theory behind it. So what we're seeing is we're seeing passive sellers, right, or sell limit orders. It just means that sellers are in control. And so if you see evidence of passive sellers, you want to be selling. And that's why I took the short, essentially. That's why the short was valid. Just going to be breaking that down now. So when we go to the candlestick chart, right, let's clear up the chart. Let's go through this properly. Now, we want to start looking. So we have our red line. This is the break line. There you go. There's the break line. Now, we want to study each and every candle before this region. Now, I often get questions, what happens if price just keeps moving higher? Well, if price keeps moving higher, then you can't take a short, can you? Because the red line is here. That's a question I get, believe it or not. But okay. Now, when we come into this region, when I enter short here, the only reason I go short here and I have my stop loss here is simply because of what I saw over here. Now, these candles here, so 59.52 to 955, roughly this region over here, right? So what was going on? A ton of aggressive buyers, right? Blue delta is present. Now, when you see blue delta, that means there's more aggressive buyers and sellers. Now, were these aggressive buy orders successful? Well, the question is no, not really, because we broke below the zone here, we broke below the body, and we got below our initial break line, and that is the key, right? So how do I translate order flow into an entry? Well, it's very simple. I wait for a key level. That's step one. So first I wait for a key level. The second is I wait for a break. The third is I wait for a retest. You need to have these three things, and I will enter here when I see the buyers failing, right? It's as simple as that. That is the short trade that I took, right? So if you, it wasn't the nicest trade to hold either because we had quite a, we had quite a range, right? So I was looking to target this red line down here, the London lows, and so this is the trade I was in. So it was a bit of a choppy, not the most fun trade. I think I exited when I saw price really coming with a body. I think when price still holding at this point, I exited here. Here was my exit, right? Just here there. So as I saw price approaching the level, I quickly got out. So that was my loss that I took, roughly minus 250. Now, here is where the long came in. Now, one thing I want you to understand is this. Now, if you look at this region here, what we had was we had a lot of aggressive buy orders. We had a lot of aggressive buy orders here. If you look at the retest, we had a lot of aggressive buy orders here. Now, again, we can back that up with the order flow, right? Because the order flow shows us here. So this was a 10 a.m. candle. So I don't like trading at 10 a.m., but this is what the candle looked like. Look at that 10 a.m. Look at this, right? What do you see here? You see a lot of zeros on the bid, which means that there's only aggressive buyers, but the market broke lower. So big red candle, which obviously shows lower prices, but when you dive into the candle's wick, what you can see is a ton of buy orders, right? Aggressive buy orders, but we break below the zone and we break below that break line. This was at 10 a.m. Eastern. So this gave me confidence to, get in short and just hold the short, right? I was confident to hold that short. Now, where I exited was simply over here when I saw price heading towards my stop loss. But the lesson you want to take away from here is that in this region there were buy orders, in this region there were buy orders. Now, this is the logic you want to adopt into your brain, right? If we break above this zone, which is what we had over here, right? Now, what does that tell you about the previous passive sellers we saw over here? Because we saw signs of passive sellers. That's the thing. We did see passive sellers over here previously because they were responsible for driving price down to wherever it got to. It didn't go very far, but there were passive sellers over here. Now, again, the evidence of passive sellers is in this screenshot here, right? And this screenshot here. Again, you see tons of aggressive buyers, no reward, right? Now, well, if we break above this level, let me spell passive right as well. If we break above this level, what does that mean? Well, it means that these passive sellers that propped up here were obviously no longer here, right? Because we've broken above the level. Or we see signs of passive sellers failing, which is a good sign if we want to go long. If we want to go long, we want to see all failure of passive sellers, right? So that's the first thing. Now, this is where the long comes in. So now we're going to be studying this price action for a long. And so I'm looking for the same break and retest I saw here. I'm just looking for it here. Now, again, maturity as a trader is realizing that, okay, I took an entry off this level to go short. I can use this level to go long. And guess what? Some days you're just going to sit in chop city. So I have a rule where if price ranges for more than 40 minutes at a key level, I am out because I don't want to be sitting in a choppy market. I think it's the worst thing you can do. It's better to take no trades or take a small loss and then get out there. But this was an example of where the long actually played out. And so I want to break that down. So what we had over here is we had a break above our level. And then we had our retest. And so for me, my break line, which is very important, my break line was here. Here was my break line. And so what I'm interested in is I want to see the price action just in this region, right? Because this is the break. It's not this. This is not the break because it's with a wick. I don't like wick breaks. I want to see price breaking with a body, right? So it's not this, it's this. So here's our break. And so when we come back into the zone, in order for me to go long, we have to pass the red line. So this is the question I got from somebody, and I'm just trying to answer in this video because a lot of people ask me this question as well. Now, I only want to enter long off here, right? So not that candle. I'll be happy to enter off that candle. This was my entry at 44, and I had my stops just below this wick over here. So I'm going to be breaking down why this long was actually valid. And so what I did was I targeted, if people want to know where I targeted, very simple. I targeted this 1 minute FVG over here, just like that. Now this was about almost a 3R risk reward, so I targeted the top of the fair value gap, just like that. 2.2R risk reward, right? So let's now go into the basic theory of this one. And so if we look at this now, the main sort of long, first we want to break down the retest area. And so what was going on over here? We had break, retest, and the long came over here. This was my entry. You can see that little blue arrow. There was my entry. So what we're seeing is we're seeing break, retest, and these are the candles that we're interested in. 1, 2, and then a little bit of 3, but it's mainly these two. So you only need a few candles typically, or maybe 5 to 10 minutes to spot the retest. And it's your job just to catch the retest, right? So again, what was going on? Candle by candle, right? Because I get too many questions about this and I want to break down order flow candle by candle. So what's going on here is we had a break and retest. So here's the break. Now, in order for me to go long, I want to see what was going on here. So I'm just going to break that down very quickly for people so they can understand. So that yellow box is very important, this yellow box here. Now, here's where it gets interesting. So we can see here aggressive sellers, right? The same way we saw aggressive buyers here failing, we now see aggressive sellers over here that are failing. Now, if these aggressive sellers were successful, we would have broken below the zone, right? So there was a lot of selling here. If they were successful, we would have broken lower. But instead, we broke higher. And so that is what gives me the confirmation to go long, because I've seen absorption of aggressive sellers. Also, on top of that, what's really going on is we've seen passive sellers fail, but over here on the footprint charts, we've seen aggressive sellers. We've seen aggressive sellers also fail. And so if aggressive sellers fail and passive sellers fail, what do you want to be doing, right? You want to be longing the market, right? You want to be longing. And so that's what I look for at my key levels, right? So again, hopefully that answers questions that people have. And so this was it wasn't the nicest trade to hold, I'll be honest. It was a bit of a nightmare to hold, but just looking at my executions for that trade, just going to break that down as well so people can understand. So execution for ES futures came, there we go. Here's the final trade. So execution at 69.43 stops were initially below 69.37, then I trailed them to break even, and about 458 USD for the day after taking the loss on the short earlier, right? So if you like this video, give it a like, give it a thumbs up. If you have any specific questions on footprint charts, order flow, how to read them, just drop them in the comments.